The Dow Jones Index led the U.S. stock index higher slightly on the first day of trading in February. U.S. stock benchmarks turned modestly higher late afternoon Tuesday, after wobbling earlier in the session, as Wall Street looks to close out February's first day of trade on a positive note following a rough January. Investors were weighing manufacturing and jobs data, while earnings from ExxonMobil Corp. And other corporate heavyweights were in the spotlight. How are stocks trading? The Dow Jones Industrial Average DJIA rose almost 163 points, or 0.5%, to around 35,295. The SP 500 SPX gained 15 points, or 0.3%, to about 4,531. The Nasdaq Composite Comp added about 33 points, or 0.2%, to trade at 14,273. Stocks rose sharply on Monday, but still logged big monthly decline. The Dow suffered a 3.3% January decline, the biggest monthly fall since November 2021. The SP 500 saw a 5.3% monthly drop, the biggest since March 2020, while the Nasdaq Composite dropped 9%. Its biggest monthly drop since March 2020 and worst January performance since 2008. What's driving the market? Investors on Tuesday indicated some hesitancy to follow up Monday's strong gains, which were a bright note after a dismal January performance for stocks, as investors fretted in part over worries about the prospects for higher U.S. interest rates. As volatile as January was, we haven't seen anything yet, said Sandy Bragger, Chief Client Officer of Experian, in a phone interview Tuesday. Valuations are just so high still. Bragger said that she continues to favor a defensive positioning in equities, with a larger allocation for high-quality stocks that include Apple Inc., AAPL, and some big tech names. She told MarketWatch that she also likes consumer product companies, some financial institutions, and value stocks globally. European markets gained on back of Wall Street's rally Monday, while Chinese and some other Asian markets were closed for the Lunar New Year holiday. In economic data, the Labor Department said job openings rose by 150,000 to 10.9 million on the last day of December, indicating the labor market remains tight. Economists surveyed by the Wall Street Journal had forecast a 10.5 million figure. The closely followed Institute for Supply Management barometer of manufacturing activity slipped to a 14-month low of 57.6% in January as a torrent of Omicron cases hit the U.S. economy, and shortages of labor and supplies hindered production. Economists had forecast a decline to 57.7% from 58.8% in December. Any number above 50% signifies growth. Investors, however, were more focused on the survey's index of prices paid, which rose to 76.1% from 68.2% in December, triggering some renewed selling that took stocks to session lows, said Louis Ricci, head of trading at Emmels Advisors, a New York money management firm. That said, the reading isn't likely to change the path of the Federal Reserve, which already signaled plans to potentially begin raising rates in March and otherwise, said Ricci, who argued stocks are on track to rise after January's stumble. Small-cap stocks have fallen into a bear market, with a more than 20% fall from record highs by the Russell 2000 RUT, which historically points to strong returns over the following 12 months, Ricci said, in a phone interview. Meanwhile, companies appear aggressive again on buybacks, with ExxonMobil announcing a $10 billion buyback and Swiss banking giant UBS Group AG UBS-CH. UBSG committed to up to $5 billion in buybacks. JP Morgan's Colin Novick is again pounding the table for stocks. But one market is close to triggering an ominous signal beyond the inflationary pressures seen in the index of prices paid. Larry Adam, Chief Investment Officer at Raymond James, said in a phone interview Tuesday that he saw some silver linings in the details of the latest ISM report on U.S. manufacturing activity. Backlogs are down in 5 of the past 6 months, while delivery times declined for a third straight month and new orders fell for a second consecutive month, according to Adam. Those may be harbingers of inflation really starting to at least ebb as we progress into this year, he said, as supply chain constraints may be unfreezing. Adam told MarketWatch that he remains bullish on the SP 500, maintaining a price target of 5,050 for the index this year. Investors continue to buy the dips almost everywhere this week, with market sentiment boosted by a strong earnings season so far where most companies have beaten expectations, said Pierre Verret, technical analyst at Active Trades, in a note to client. Read, you can still find a haven in tech stocks. These 20 offer the safety net of highly stable profit. Technically speaking, most indexes have registered solid rebounds over major support zones and are now challenging key resistance levels. If cleared, these resistances could open the doors to an extended rally, potentially driving prices up to new record highs on the short to midterm basis, he said. Also see, bears beware. Past corrections for the SP 500 are only 15% on average. Outside of recessions, what companies are in focus? AT&T Inc. T on Tuesday said it would spin off its interest in Warner Media following the unit's merger with Discovery. AT&T also said its board approved an annual dividend of $1.11 a share, down from $2.08, to account for the Warner Brothers spin-off. AT&T shares fell around 4%. Tesla Inc. TSLA will recall 53,822 vehicles because of an issue with its rolling stop functionality. Shares were down more than 1%. Shares of United Parcel Service Inc. UPS surged more than 13% after the package delivery giant reported earnings and revenue well above expectations. ExxonMobil Corp. Stock XOM rose more than 6% after the energy giant reported an earnings beat, though revenue fell short of consensus. AMC Entertainment Holdings Inc. Shares AMC jumped more than 5% after the cinema chain operator offered fourth quarter guidance, with revenue ahead of consensus, though a net loss range bigger than expected. SiriusXM Holdings Inc. Stock Siri jumped 7% after the satellite radio company topped profit and revenue expectations, and provided an upbeat outlook, along with declaring a special dividend. How are other assets trading? The yield on the 10-year Treasury note BX, TMUBMAS 10Y rose about 2 basis points to around 1.8%. Yields and debt prices move opposite each other. The ICE US dollar index DXY, a measure of the currency against a basket of 6 major rivals, was down 0.2%. West Texas Intermediate crude for March delivery CLH22 edged up nearly 0.1%. to settle at $88.20 a barrel. Gold's April futures contract GCJ22 rose 0.3% to settle at $1,801.50 an ounce. Bitcoin TCUST was trading up 0.1%, just shy of $38,500. In European equities, the Stoxx Europe 600XX SXXP closed 1.3% higher, while London's FTSE 100 UKX gained 1%. The Nikkei 225 JP Nikkei finished up 0.3%. Markets in China and in other parts of Asia are closed for Lunar New Year. Barbara Kallmeyer contributed to this article.